Hello guys, welcome to my channel, CPA Mohammed. I'm your host. Focus today is just a brief class on the deductions allowed and deduction not allowed. Uh, this is purely for taxation and it's normally being stated in Income Tax Act. This is for Kenya, Income Tax Act, Section 15. So Section 15 of the Income Tax Act says that for the purpose of this, for the purpose of ascertaining the total of any person of a year of income, they shall, subject to Section 16 of this Act, be deducted all expenditure incurred in such year of income, which is expenditure wholly and exclusively incurred. Wholly and exclusively incurred. You need to mark that term, wholly and exclusively incurred. So any expenses that is wholly and exclusively incurred by him in the production of that income. Let's say you are doing a business of insurance. Then if you're doing a business of insurance, you only deduct those expenses that you incur, which generate to the profit of insurance. Because at the end of the year, for that insurance company, you will have that you will get a profit. So you need to deduct all the expenses that you incurred when deriving that profit. These expenses can include, let's say, salaries, because you are paying your staff, those who are working for you, salaries and wages. These are normal expenses. This should be deducted. Salaries and wages. This should be deducted because it is relating to the generation of the profit that you have generated from the insurance. Salary and wages contribute because those staffs are working for you. So at the long run, they have generated the profit. And you can see rent. Rent is also an allowable expenses because it is wholly and exclusively incurred in the production of the profit of the insurance company, rent. When they are paying rent, they incur rent so that the premises can have that operation, the building. They can continue with the operation in that building so that they pay rent. This is the same case with electricity. This is also a normal allowable expenses because without electricity, nothing will be happening. There will be no people cannot be working on their computers because of lack of electricity. So electricity will generally lead to the production of the profit. So and any other income, because this act is specifically on the expenses wholly and exclusively incurred by him. If you're doing an insurance business, you want to tell me you want to incur expenses on partners. That partners cannot be stated here because that partners are not relating to the insurance. So you only deduct the expenses that are wholly and exclusively incurred. Those are what called allowable expenses. Apart from those normal expenses, also are, uh, capital allowances are allowed. Capital allowances. By this one, we have what we call the investment deduction or the investment deductions, capital deductions, whereby we have like tractors, lorries for those heavy motor vehicles, even the computers. You need to what you call you allow 10%. There is a rate for each of those assets, specifically stated in the Income Tax Act, whereby, let's say, for example, if it is tractors, you only get 10%, 50%, then 10%. Because the first year you allowed 50%, the next consecutive year you only given 10%. So you need to know the capital allowances. These are normal expenses. They are also allowable. Apart from these capital allowances and the other expenses that are wholly and exclusively incurred by him in the production of that income. We have section 16, which says the deduction not allowed. This saves otherwise expressively provided for the purpose of sustaining the total income of a person of any of income. No deduction shall be made in respect of any expenditure or loss which is not wholly and exclusively incurred by him in the production of that income. What do you talk about here? Because any expense that you incur and is not relating to that production of that income, let's say illegality, fines should not be deducted. Fines should not be deducted because they don't relate to our they don't relate to the generation of that income. Should not be deducted. Another expense is all taxes. All taxes are also allowable, should not be deducted as an allowable expenses. There are also uh, illegality or personal expenses. Personal expenses should not be subtracted also. Personal expenses should not be subtracted from this as an expenditure, which is an example of a disallowed expenses. Then all the fixed assets are disallowed. When you purchase those fixed assets are disallowed. You only allow the capital allowances on them, but the expenses you disallow. You don't allow the expenses, but you only claim what we call the investment allowance deduction. So, and there are several of them, those expenses which are not wholly and exclusively incurred. Even relating to this one, any capital expenditure or loss, diminution or reduction of profit, any expenditure should not be, this should relate to also the fixed asset. You only claim the investment allowance. The capital expenditure you disallow. If you can go and read more about this in the section 15 and 16 of the Income Tax Act, but I'm going to do a question, full question in the next coming class, whereby I'm going to do several questions, but attaining to taxation of partnership, taxation of companies, taxation of even insurance companies, taxation of even the individual taxpayers. All of them is going to do a lot of those illustrations. Otherwise, thank you for joining. I'm your host, Beko Muhammad.